Good day. This is Roger signing in for the BFN, the Business Financial Network. And welcome to our special podcast series, The Stock Sauce, where we get exclusive insight directly from one of the many companies our investment audience has been following as we continue to assist our viewers in the discovery of unexplored brand new asset classes and emerging issuers in the world's markets. And it's a huge pleasure to welcome back the CEO of Atlas Salt, Mr. Rick LaBelle. How you doing today, Rick?
I'm doing well, Roger. I'm pleased to be here.
Awesome. Thanks a lot for being here. Rick, Atlas Salt has just released a feasibility study and an expansion scenario for its 100% owned Great Atlantic Salt Project in Western Newfoundland. Why don't you tell us a bit about it?
Listen, the financial, the FS just came out on Monday. It's a remarkable outcome, and it builds on the PEA. And just to give you some broad numbers, NPV of $1 billion. You know, that's at 8% discount rate. And actually, if you tweak it down to a 5% discount rate, it's $2 billion. And we're not even talking about the expansion scenario. We're just talking about the feasibility study. And just to tell you the difference between feasibility study and a PEA level, the feasibility study is a blueprint. It's a risk reduction. It looks at absolutely everything, marketing and costs. We're so happy with the outcome.
Yeah, and what has my attention is the 4 million ton per year expansion case at a preliminary economic assessment level over a 47.5-year mine life. So you mentioned in the last conversation that this mine will be one of the greenest and cleanest mining projects in the world. How will profitability, which is really important to investors?
Well, we just talked about the net present value, so that covers profitability. But what's the most important thing here is, and what is, I'm going to use the word unique, cash flow of $17 billion over that period of time, 47 years. And that's out of revenues of 24 billion Canadian dollars. The conversion factor is remarkable. It doesn't get any better than that. This is a exceptional outcome. And with cash flow comes all kinds of advantages. We are self-funding. Any future capital requirement will be covered by the mine. This is a unique outcome. It's a great opportunity.
Wow, indeed. And in these inflationary times, putting a mine into production at a direct cost of just $302 million is quite unusual. Why can Great Atlantic be built for so little? And is that a realistic number?
Yeah, it is, and that's one of the reasons why I'm here. There's three major items in building a mine. There's the shaft, because they're usually deeper than Great Atlantic. There's the actual mine construction, and there's the metallurgy, the mill, the tailing system, so on and so forth. We don't have those things. It's a shallow mine. We don't need a shaft. That's a $300 or $400 million saving. It comes out in its purest form of 96%. We don't need to do anything with the product. It's ready for end market. So we don't need a mill. There's no complex metallurgy. That's probably usually a mill costs is about just as much as the mine or the shaft. So we only have 1/3 of the costs of any other similar opportunity. And that's why it's only $301 million. And that's why we are very excited about this project. It's minimal risk. You know, it's a simple process.
Yeah. Okay.
96% pure. So.
Wow. Yeah. So the risk of execution on this project seems really low, right? In part because we're talking about salt, not gold, not copper, not lithium or uranium. You've been successful in the mining sector because you understand how important it is to de-risk. Do investors fully appreciate how different this is from a risk perspective compared to the normal sort of mining project?
Not yet, but we're going to do a better job explaining that. And let's start with the basic principle. A very simple mine to build, close to surface. And what this mine has versus any other opportunities that I'm aware of this magnitude, right off of a paved highway, there's power right to the gate. There's a small community nearby that of able and willing people that want to be employed. It has a deep sea port. No, we can't forget that. That's one of the most important things. Literally, the deep sea port is a couple kilometers away. It's at the end. It's going to be at the end of our conveyor belt. So
Wow.
those are factors and facts that no other opportunity of this magnitude has, which we have.
Wow. There doesn't seem to be a lot that can go wrong. However, dilution is always a concern for shareholders. How are you going to avoid the excess dilution if you plan to take steps to put Great Atlantic into production?
Yeah, it's a great question, Roger. And is there going to be dilution? Yes. So let's set that aside. And here's the three reasons why it's going to be minimal. Number one, we're already saying that the direct capital is minute in comparison to other opportunities of this magnitude, $302 million. Other ones, to put into production are in the billions. This is 302 million. So let's keep that in mind.
Yeah.
Secondly, the cash flow that we've been talking about over a 47-year mine life is $17 billion pre-tax. Cash flow is king, man. It's all about cash flow. Third and not least is offtake agreements, which is an asset. People don't realize that. When you get a PO to sell a certain amount of product, and it is a PO, banks like that. It's bankable. This is why I believe those three items that I just mentioned we will be able to debt finance. We will maximize debt financing. Trust me, I am motivated to not have any dilution. So I'm going to do everything I possibly can to keep it to a minimum.
Okay. You say you're going to hire a world-class team of mine builders in the coming weeks. The feasibility study improved modestly on the original PEA. The expansion case scenario, which is basically replaces the original PEA, is a major shift in the development of this project. So do you expect with your team that you'll be able to further optimize this project and make the economics even better?
So once the mine is built, that's where the optimization projects and processes start, once it's built. So the answer to your question is yes, but that's a little bit later. Let's talk about the team that we're putting in place. And this is where every mining company screws up. It's the execution of the feasibility study, the execution of the plan to build the project. And that's where we're going to be focused, is making sure that we execute properly, that we deliver the dream. It's a great dream. It's a great, right? It doesn't get much better than this. We just have to deliver on it. And again, in the industry, in this mining industry, we do not give enough time and enough resources on building a proper execution team to deliver the plan, which we are going to be focused on.
Agreed. Okay. There seems to be a disconnect between Atlas's current market cap, about 120 million, and the near present value of the project, which is approximately around 1 billion at an 8% discount in the feasibility study. Is there something I'm missing here?
Well, the feasibility study just came out, so we're starting to tell our story. Two is it's summer. Maybe people are off on vacation, not reading their material. maybe, I don't know. But I think we just haven't told our story enough. And the story is new. It's hot off the press. Before it was at a PEA level. PEA level announcements do not get any near the attention that a FS announcement, and this is what this is. So I think it's just about telling our story. And once people look at the expansion case that's embedded in our feasibility study, like NPV of $4 billion, 47 years, $17 billion of pre-tax cash flow, like I don't know what to say. The numbers speak for themselves. So
Agreed. Numbers don't lie, people do. Low-cost producers always win, which seems, based on some closer inspection, is a huge win for Great Atlantic. This would really be a state-of-the-art mine for the 21st century. Why would investors put their trust into you, Rick, to unlock the full value of this asset?
Yeah. So listen, I have the technical skills. The team that's coming in is going to augment that in terms of execution. I have the deal making skills, and the timing is absolutely remarkable. I've never seen anything. Yeah, no, listen, I'm here because it's a great opportunity, and I truly believe that this is going to be executed remarkably well. And I've been able in the past, and that's my history, and I will with this project. I'm able to bring a person, a project, a team of people to a place they would not have gone on their own, and that's why I'm here. I have those skills and those tools, and I believe the world is our playground.
Awesome. That's really good. Thanks, Rick, for taking the time to share with our investment audience your company's current status. And Rick, we look forward to seeing you again in the future with more updates.
Thank you, Roger. Well done.
Thank you.